All right, hello, everybody, and welcome. I hope you're having a great day so far. So, I got quite a few topics I wanted to discuss today. First up, we have first day of September. Markets are down, just like everybody wanted. We'll go over my opinions and perspectives on that. All right, so after we go over what happened first day of September today, we're going to talk about some very exciting Google news for all you Google shareholders. Then we're going to go over some of the discussions that was happening last week on CNBC about a tech rotation, and then we're going to go into a new stock that I've been looking into. So before we do start all of that, if you could please go down below, hit the like and subscribe button. It really helps people find the channel and gets me out there. So let's get into it. So I'm looking at this at the end of the day, September, and pretty much all of the indices are down except for the VIX, of course, that was up. So investors got exactly what they wanted. We have an exciting, drama filled September. Um, Personally, if you ask me, I think this is going to be very short lived. I am going to be buying the dip on my positions. And I think if we look about a week or two out, things will probably be back to where they were, if not higher. And that all is especially going to probably start with the exciting news we got for Google today. If by some miracle you haven't already heard, a judge ruled that Google can keep the Chrome browser, but it won't be allowed to strike exclusive search deals and must share its search data. In other words, the worst case scenario is not coming true with Google. Honestly, if you ask me, I feel like this really should have been the conclusion that most reasonable people came to. It really surprises me that Google has been trading at a discount for so long. Um, I have been buying the past couple of months, and I'm really happy, but honestly not very surprised to see this news. So anyway, kind of back to the whole September markets down thing. So, a couple weeks ago, CNBC were discussing the rotation out of big tech into cyclicals. While I personally am not of the full belief that this will come to fruition, I decided to search around and get some information. Thought I'd share it with you. Jeez. Anyway, okay, back to it. What I learned after looking in a little bit into this concept, just to kind of be in as well informed as possible, is that in general, energy tends to be the biggest beneficiary of this rotation when it happens. That and the oil field services companies tend to see this rise much sooner than the oil producers like ExxonMobil or Chevron, for example. Because of the long term, uh, like overarching change into renewable energy, I really have not been comfortable investing in the energy sector. Until now, I think I found something that's very attractive. So here I have Weatherford International. This is a multinational oil field service company headquartered in the US, but it operates out of 75 countries. Uh, so that's going to make this a picks and shovels play rather than actually relying on the sale of oil and natural gas for revenue. The stock is down, what is that, about 33% year to date. However, since the April lows, it is already up 65%. So stock is really picking up steam. We're actually already kind of coming into that rebound. So I wanted to share my research on it with you guys. All right, real quick, before we get into the evaluation of WFRD and all of my findings, that is Weatherford International, I do want to let you guys know what you see in the video is just a summary of my research. If you want to see the full, continuously updated research report, including my detailed valuation model and ongoing analysis of this stock and all other stocks that I'm watching, please do check the link down below. You can join my Patreon, and I release all of those as soon as I finish them, even before I get to making YouTube videos on them. So we hope to see you there. Anyway, let's get into it. Right, so let's go ahead and go over to Qualtrim to go over the numbers a bit better. We're going to click the quarterly trailing 12 months to kind of smooth everything out a bit. As we can see, the stock has been down as we had just discussed. Kind of makes sense why revenues are declining. However, despite that, we actually have increasing income and increasing EPS. This is just sequential, but nonetheless, it is still very interesting to see that free cash flow is stable while revenue is declining and we have an increasing net income. That has me really excited for the future if we have an increase in revenue again and we're able to keep the margins the same, we're going to be in a very good spot. Right, so to be clear, this obviously is not a growth story. While we can see some revenue growth moving forward, we are mostly interested in the margin and profitability. This is a value play. And just to kind of show you the shareholder return the company is providing is actually quite substantial. Okay, so to touch on the revenue decline that I alluded to earlier, the company has divested a large portion of its low margin businesses. They are undergoing a digital transformation and aiming to move into high tech differentiated services, primarily MPD and advanced wireline, which require specialized knowledge and technology. This gives them pricing power and the further ability to increase their margins. So, with the transformation the company is undergoing, I do find it rather compelling, but it would be irresponsible of me to make a investment without fully understanding the industry or its competitors. So, I did kind of dive into the most relevant large names. We have Schlumberger, Halliburton, and Baker Hughes. Overall, despite the massive revenue decrease, we can see the negative 14% here with Weatherford year over year. That is the actually worst out of the segment. Despite that, they have the highest margins. And again, I do believe they will continue to increase, and especially if they do kind of fix that revenue number, we could see a very large spike in profitability. Um, just again, we're to go over a summary of the investment into Weatherford. It is a margin expansion story. Their quarter two 2025 EBITDA margin was 21%, beating out the peers 17 to 19, and that is again with a revenue decrease of 14% year over year. This is a value stock angle supported by the strong free cash flow and shareholder returns. Despite the fact that they have higher margins than their competitors, the stock is actually trading at a discount. Analysts believe that the fair value of the company would be around $99 per share, leaving it at approximately a 30% discount as it trades today. So, keeping this all in mind and then remembering the context of the rotation or the trade from big tech into cyclicals and the potential surprise upside of um, geopolitical events like, say, the conclusion of the Russia Ukraine war over any time over the next 2 to 3 years, um, pr- it provides a lot of room for very significant upside from where we trade today. Anyway, that's going to be it for today. If you would like to see the full research report, please do remember to check the link down in the description. You can join my Patreon and again get full access to not only this stock but all the other ones that I watch and update it as frequently as I'm able to. I really hope you enjoyed. If you are still here, please do leave a comment down below. Let me know um, what I can do better, what you enjoyed, and I hope you have a fantastic rest of your day. We'll catch you in the next one.